I sent you that RBI last night, and you say there has been some options action in some of the cruise lines.
Yeah, not terribly surprising, Brian, because when I looked at the actual numbers, like you said, the reason Miami's down is, my gosh, 436,000 people used to work in that industry. Now it's under 200,000. So obviously that's not just hurt those stocks, it's impacted materially the environment, all the places those people would spend money. But they are coming back, and they're betting pretty big on RCL, Royal Caribbean Cruise Lines. That one really seeing the most upside of the cruisers, but CCL, all of these are making comebacks, and it's just a question of, when we look at this 6 months from now, these stocks might be driving Miami and some of those places much higher, and certainly out of that ranking that you had today.
So there is some optimism there around the cruise lines.
Yes, sir. Very much so. And then Pittsburgh, oh my gosh, you talked about Alcoa, and obviously, things going on with the war have certainly helped because Russia is such a large producer of what goes into becoming smelted aluminum and so forth. But EQT, Houston with that oil and natural gas, well, this is the biggest EQT. And so not surprising, they're still betting on more upside out of it. They're buying the 80 calls all the way up to the 85s and 90s out till June, Brian. So they're looking for more upside out of EQT for sure in the nat gas space. Yep.
Yeah, and we had EQT CEO Toby Rice, by the way, on Worldwide Exchange earlier this week. They are the biggest natural gas producer in the United States. They're not in Texas. They are based right there in Pittsburgh. John, you guys do such a great job at Market Rebellion with options and sort of looking at market signals. Thanks for on that. Are you seeing anything on the macro market side giving us any direction or any clue about the way things are going to go overall on a macro level?
Well, we've seen volatility, which you and I talk about all the time, come down so dramatically. I mean, the 8th or 9th of March, it was up at 37. It's now touched 21 yesterday. So that's a pretty steep drop in volatility, and it's right on a moving average right now, Brian. So if it holds down here at this, way much lower level, that's going to be interesting going forward because there was a lot of folks that were betting on, this conflict and they're certainly putting their money where their mouth is with the bets that the broader market impact has faded pretty considerably.
I'm shocked, John, that the VIX is under 20. I mean, honestly, with everything else going on, it just kind of blows my mind. What do you think is the reason for that? Just optimism about hopefully a quick end to this war?
Yeah, clearly that's it. That it certainly looks like the opportunity, the door is open for Mr. Putin, and he is likely to step through it, is what market participants are saying. Much more likely to step through that door rather than continuing this conflict. And that would be good for just about everything. But you and I know that doesn't mean sanctions go away with the snap of a finger. So I would still be, watching those stocks in energy, fertilizer, food, because they're going to be higher for a longer.